And if you're here and I'm here, this is going to be a good time. Why? I want to start right off with where the markets left. I want to start right off where the markets left off on Friday and look at where they're about to go. And, a couple of weeks ago, we had Alex Cole, the inventor of the go, no go trend indicator. We're going to use that indicator to look over the markets, because as I was looking at it over the weekend, I realized this is a very simple way to just check out what is going on with the markets right now. So I'm going to share my screen and show you how we might go through that. So let's see if I can do this properly. And we're going to bring up trading view, and we're going to bring up chart one. Take a second here, but what I want to let you know is that we're seeing a real split in the markets right now, at least according to most of the technical indicators. Now, for those of you who didn't know or didn't hear a couple of weeks ago when we had Alex on, what the go, no go trend indicator is something that shows us a collection of technical analysis indications, all kind of combined into as much as possible, a single look. Let me see if I can get this going. We'll get this one closed. We'll get the implied volatility rank. We'll bring that one back a little bit later, but the money flow is gone. And let's get straight to QQQ, the Nasdaq 100. Delete these arrows out of the way, and we'll put on the go, no go trend. So now the go, no go trend is the free indicator. He's got some pay only ones. In fact, I think just for the fun of it here, I'm going to open the go, no go trend pro, which he was gracious enough to give me access to. Oh, I've just applied it 4 times. No problem. 1, 2, 3. Okay, here we go. So now what it does is it changes colors into the sort of bluish versus purplish, and bluish is bullish and purplish is not. And the amber color in the middle is a sort of deciding day. Well, a couple of days ago, we had a deciding day on the Nasdaq, which really happened to coincide with what would have been the failure of this head and shoulders pattern on the Nasdaq. See, so there's a high, another new high, a lower high right there, head and shoulders. Okay. Now, I'm not a big fan of, trying to use patterns to predict. I am a big fan of using patterns to document the trend and also to gauge my own risk strategies. So here's the way I look at it. The head and shoulders pattern is a reversal, which basically says, hey, this high failed to get past this former high. So it's a lower high. And if you break the neckline of the head and shoulders pattern, you now have a lower low. So that, at least in the short term, is a new downward trend. It's at a minimum, it is the discontinuation of the upward trend. See, so we've had that move. Then this price action here discontinues this upward trend, right? So when you have a failed trend, you then have to gauge, well, how weak is the trend? Is it likely to change into a downward trend? Or is this my opportunity to be a buyer because it's a dip and then I want to, revise? Well, you never know exactly, but what you can do is gauge how much risk you'd have to take to make a bet on the matter. And so right here is the neckline. If I'm down here and I think, okay, I want to play the downside, well, my risk is getting back above that line. If in fact this thing comes right back above the line, then I think it might not carry on. Now, there's nothing special about this line that the market has to stop if it's a downward trend, but there is something special about here because this is the former high. And so if we are going to trend lower, we should not exceed the former high, right? So that's our risk. We come down here, we get in, it's, the quick risk is this, but really the trend risk is that. Well, this thing comes all the way back up, stops, hits resistance right there, goes up, goes down, then same thing, tweezers top, Steve Nissen calls that, right? The candlestick guy. And and down we go. So that is confirmation that this is still the resistance, the overhead resistance, the place where people want to be sellers. And that means it's kind of helping the downward trend. Further, you've got, moving averages and volume patterns. See those volumes come in. All of this is put together in the go, no go trend, right? And so on the Nasdaq, what do we got? We got a new no go signal. This was the decision day. In other words, if the next day the trend had come up here, the price had come up here and gone above this trend, you'd see one of these blue candles represented, meaning the trend, although it's a weak trend, it's forecast to continue bullish according to Alex's indicator. Here, on the other hand, it's a dark purple trend, which is a stronger downward trend. So Alex is saying this is forecast to go lower. The Nasdaq is going lower. That's what that says. So that's all interesting. But what about, what's going on elsewhere? Look at SPY, the S&P 500. What is it doing? It's not doing the same thing. Well, maybe it's not doing it yet, but that's the whole thing of the past. I mean, you look at this, there's hardly any purple here, right? This is strong trend, and then this is weak upward trend, but still an upward trend, the lighter blue stuff, right? So you get down here, decision day, bounce, strong trend. Well, now it's weakening, right? This is the kind of thing where if you saw this without knowing the Nasdaq, you might say, this is a bounce opportunity. Hey, if we're going to come up here and exceed this high, I want back in. I want to jump in because we're going to get a new upward thrust. And if the Nasdaq looked that same way, then we would think exactly that. We would want to do that. But the Nasdaq doesn't look that way. So we've got these, conflicting reports. All right, let's go look at our tiebreakers. The small cap stocks, IWM, which looks like the S&P 500, and the Dow Jones Industrials, which also looks like the S&P 500, but slightly different characteristics, right? You got this sort of gap here, and that was, I believe that was a downward day, Friday. Let's just hide the go no go for a second. Yeah, red candle. See, so in other words, that's a gap and a drop. All right, now this is something called an exhaustion gap. Really scary if you're bullish minded. So although it is looking like a weaker trend, a weaker upward trend still, right? We don't have a lower high and lower low. We don't have that pattern, so we can't call this a downward trend. We can't even forecast that it's going to be, a continuation of the downward trend. Yeah, it might go down, but that doesn't mean downward trend. And we want to be able to bet on trends, stuff that will carry on several days, right? So we're looking at the Dow, and we're seeing this gap and then a drop, opens high, closes low. That, if you look it up on Investopedia, which I happen to review and occasionally write for, it will say, actually, it kind of says this. I keep trying to put that in, but in the CMT materials, which I got to be in charge of for 4 years, we made a big deal of making sure the exhaustion gap was very clearly defined. And then I took some of that definition, and when I started working with Investopedia, tried to insert that in there. But here's the thing. Exhaustion gap is defined by Thomas DeMark, and I thought he definitely had the best definition. But Tom DeMark said trends don't reverse. They run out of steam. In other words, you don't get sellers coming in there overwhelming the buyers. You get the buyers being exhausted. That was his way of explaining it. And so when you see a gap that depicts exhaustion from the buyers, here come the buyers, up. And what do we got? We got volume dropping. And then all of a sudden, we got this day here, which, the buyers try to go up, but they can't. Sellers push them down. So that's all, red volume selling. And then we get nothing but down. The buyers are exhausted. that is, they run out of money to use to buy. They run out of will. They run out of desire. They run out of strategical belief, whatever you want to call it. The point is, there aren't enough new buyers coming in to continue the upward trend, or even buying this dip, which is, if you loved buying the stock all the way up here, why wouldn't you love? If you liked buying this, why wouldn't you love buying that? That's really, especially these past 4 or 5 days, right? Um, so I heard, not heard, I was speaking with a gentleman who has a large uh, financial planning practice, high net worth individuals and so forth. And what he said was that people have, especially people that are older, 60, 70, well, no, more like 70 and 80, but are high net worth in the US. They have something called a required minimum distribution. You have to take out 3% a year. Now, that was held back from 2020, but in 2019, at the end of the year, the major indexes had this big drop, 20% drop. And I theorize, and he agreed because he saw this in his own practice, that the requirement minimum distributions all coming in at the same time from high net worth individuals who all had to take out 3% by the end of the year really helped push the markets down. We don't have that influence this year. But what we do have is when people start the beginning of the year, we have people who have new 401k balances. That is, you have people that had money from December and stuff, and the holiday checks, and this year we had stimulus checks too come in January. So we had a bunch of money come into the markets, or become available to go into the markets. And then you had something called the catch-up contributions, or I mean, so I did this for the first time this year. You have people that are in a high enough tax bracket where if you were to contribute a certain amount of money into your IRA or 401k, you could actually lower yourself just down a notch and save yourself a couple $1,000s in taxes. I found I could do that if I could just put in, another 10 grand into my IRA. So great. I did that and brought my taxes down. Why not? I found from talking to this gentleman that there are a lot of people that do that in the first quarter of the year, like in January, February timeframe. But by February, it starts to taper off. Well, if you think about his idea and the idea that the US stimulus program had got going, then all of this stuff happens right in January and February. And then through March, there isn't that money, right? We don't have earnings. We don't have a lot of fuel to be putting new money into the market. So that kind of fits the exhaustion scenario. This sort of extra money which comes in for funds to manage and spread around, it's not there anymore. I mean, it's already run its course. It is exhausted. So we get this exhaustion gap on DIA, on the Dow Jones. And we're also looking at the small cap stocks, which have, had a really good run, but see, they're even weaker, right? Russell 2000 here we're looking at, they're even weaker than what the S&P 500 or the Dow was looking like. So it's kind of dicey. I mean, the Nasdaq looks like it's poised to continue going lower. I mean, looks like, right? Not necessarily is. So let me see if I can bring up my real-time count. Oh, I don't have that one. So maybe I'll just do it this way. We'll go to the futures on Trading View. Yeah, that's right. Okay. And let's look at the 5 minutes. So what is the NASDAQ doing right now as we speak? I'm going to turn off the go, no go look here. This is the 5-minute chart of the NASDAQ compared to where it was at Friday's close. So where's Friday's close? 21st March, 2250. That's, oh no, that's still There we go. 19th of March. Yeah. So right here is Friday's close. Right there actually. And where are we? We're up. We're up 200 points, not quite, or more than 1% because we're up more than 130 points, right? 100. No, we're not up 100. All right. So we're up about half, 0.75% right now so far. And oh, there it is, 0.7%. So now we're trending higher after hours. Okay. So that kind of fits in. That's important information. I guess I wouldn't say it fits necessarily because we saw we're at a tipping point. Now, which way then are we starting off? Well, we're heading higher. That's the tip that we're watching. Well, now let's look. I've been doing this in the past few weeks. Aussie yen and euro. Now, when I checked the Aussie yen about 2 hours ago, it was, well, down here, and it was down for the day. It is almost back to flat. The important move is it's trending higher. As we have mentioned many times, Nasdaq, Aussie yen, highly correlated, 75% correlation. So this looks good. This all says we've got a bullish start for the week. And therefore, it looks more like we're, at least for the first little bit of the week, likely to do a bit of a bounce, bit of a move higher. Prices kind of sustain. We saw that we're exhausted, and we saw that we've got downward pull on the Nasdaq. So maybe what's going to happen is we're going to go up a little bit, and then we're going to push down throughout the course of the week. We're still we're approaching now. We're about 6 weeks away from D-Day. Is what I talked about last week, May 14th, D-Day. That's the day when there will be so many sellers, so many people that have the temptation or desire to take profits from this fantastic year they've had since the bottom of the markets in 2020 until now, that they will want to potentially sell out. And if a bunch of people all sell out at the same time, that'll drive prices lower and bring even more sellers. Could be scary. So we're keeping an eye on that. It's not here yet. But before we talk any more about that, or we'll get into what stocks might be shaping up well, since we've got the NASDAQ and the Aussie yen headed up, and we've got the potential for a nice opening for Monday and Tuesday in the U.S. stock markets. Before we get to that, I want to bring on my guest. I'm super excited to introduce to you this week's guest. Her name is Sonia Hamouda. And Sonia, are you there? I see that you're connected. Let's get your audio and
I'm
video
here.
going here. Hello,
Hi.
Sonia. Thank you for
How are
coming on.
you?
Doing well. How are you in sunny Florida right now?
It's a little gray today, but I'm good.
Okay, a little gray today. All right.
Good
So
morning.
good morning. Good morning. Thanks again so much for being here. I really enjoy going to Sonia's part of the country because I have a brother that lives out there, and occasionally I have business out there and get to travel out to the Florida coast. A lot of fun, beautiful place. So I asked Sonia to come along today because I wanted to let people know who are getting new or who are new to trading and kind of getting started and trying to figure out, hey, what's possible in the stock market, in the US stock market. I wanted them to be able to meet Sonia and hear Sonia's story. Sonia, I met, what would it have been, 2010, Sonia?
Yes.
That sound about right?
Yes.
10,
Yes. No,
11, somewhere in
actually.
there.
No, 2010. Definitely.
2010. Yes. Okay. Met Sonia through a good friend of mine by the name of Tony Turner. And Tony wrote a book called A Beginner's Guide to Short-Term Trading and A Beginner's Guide to Day Trading, those two books. And she actually wrote another, and she wrote a fourth with me. Together, her and I wrote this book called Invest to Win. But while we were working and collaborating on that book, I was also helping Tony with some of the people that came to her. You know, she had a weekly webinar that she would do. and Tony's Market Club was called. It's actually very good. Statistically, its trades that she put out beat the market pretty well, and so I like working with quality people, and Tony's students were always quality students. Well, Sonia's one of them, and so I got the opportunity to be a trading coach to Sonia through working with Tony, and ever since then, Sonia has been off like a rocket, doing well, and so. Sonia, why don't you tell us a little bit about how you got started trading?
Well, just like you said, I ended up coaching with you, and what really helped me was to focus on certain things instead of trying to do everything, um, which Tony Turner was um, pretty much just swing trades, and then you taught me how to day trade. And so early on, we recognized that I really, really needed to focus. So that's, you taught me a little strategy that I modified along the years, but
Right.
still the same principle.
Wonderful, wonderful. So you had an interior decorating business,
Interior
is or
design.
interior design, something like that, years ago, and you got trading and got good enough at it that you could just leave that behind and focus on your trading.
I
And
did,
so
and I'm
I asked
glad.
you, yeah, you're good, good, yeah. I asked you when we were talking earlier last week about what would be one tip that you could tell people, and you mentioned that you mentioned focusing. And so, as you recall, or as you mentioned there, I do recall we were helping you. You were doing some swing trading, but you had all that time on your hands because you weren't, working a side business and trading at night or just trying to put on
Mhm.
end of day trades. You had the ability to do intraday trading, and so because it's one of my favorite things to do, I shared with you some ideas, and you're better at it than I am now. That's really awesome.
Oh, no.
And
But
and so you mentioned focusing on that really helped, and then just picking one strategy and focusing and then getting better at it over the years, which you've done. In fact, would you mind sharing with everyone what you shared with me? How what kind of performance you had you've had over the years, and in fact, you had a pretty good year last year. So tell us about that.
last year was really, really good. But so now I don't just day trade, I swing trade and day trade, and I use about four strategies throughout, the year and the months and the week. So last year was 67%, but that
67%
was
return year over year. That's great.
that was a very special year. um, so far this year it's a little under 20%,
20% so far this year. That's a great start.
not quite
Congratulations.
yet. But
Yeah, yeah, yeah. Well, that's that is a fantastic start. So really, congratulations. And you've been actively trading for 10 years now, correct?
yes,
Yeah.
wow.
And you work primarily with two ETFs, TZA and TNA. Is that correct?
Yes, that's my bread and butter strategy. And so when I said, you taught me how to focus on one strategy, but then we also focus on essentially one index. And that
Yes.
really helped me instead of every day having to find stocks that I could trade and, which way. That strategy helped me, having TNA and TZA open and then seeing what's tradable right now
Yeah.
and, taking quick little bites. Um, and then another thing on that strategy, I don't know if you remember, but I would get frustrated, because we'd go a certain amount of ATR down and then take profit a certain amount up. So, but then you would have trades that would go, whew. And so we did the 1, 2, 3. I don't know if you remember, but I still use
Yes.
it
Do you?
where,
Wow, that's great.
and so I couldn't get frustrated or annoyed if I followed the rule, which really, really helped.
Yes. Yes. Well, so Paresh comments to your performance saying, "Wow, yes, it is a big wow." So that's neat. Presh, one of our attendees here today. Now, for those of you who are listening and may not know what TNA and TZA stocks are, they're ETFs, and they track the Russell 2000. So think about this. They're really nice because they're leveraged ETFs that if the Russell 2000 moves up 1%, then TNA will go up 3%. So it's a triple leveraged ETF. TZA is a triple leveraged inverse ETF. So if the Russell 2000 goes down 1%, TZA goes up 3%. So you think about that. Of the four major indexes, you've got Russell moving more than any of the others. And then you got these two things which triple that move. So you can be guaranteed to get good moves every day in these ETFs. Further, these ETFs are so liquid that they can take a lot of shares in and out trading. It's not like you get a lot of slippage. So they make for fantastic intraday scalping kinds of instruments, which we identified years ago. And ever since then, Sonia's been coining it with those two. I had the opportunity last year when I had more time in my hands where I could just sit back and do that same sort of thing. Now, what Sonia does and what I do are a little bit different. What I like to do is literally buy it and sell it. You know, if I'm in that trade 5 minutes, I'm disappointed. I want to be in and out within seconds if possible. Grab 2, maybe 3 cents. It's a little more volatile, or I should say a little less volatile now than it was a year ago, about 10 or 11 months ago this time. And TNA and TZA were really easy. Just get in 3 seconds or 3 ticks later, grab the profit. And I would just simply give 6 to 8 ticks as my stop loss. So, I'd risk 2.5 to make 1. That meant I was winning anywhere around 75% of the time. And that's a lot of fun when you're just sitting there, click, 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 back and forth. You're winning most of the time. And you really got to be careful because the temptation is, oh, I want to win again. And it goes against you. No. You got to have the discipline to get right out. So you just take that loss. And anyway, that's my style of doing. Sonia, however, is a lot less spastic in her trading compared to me. So Sonia, tell us how you would handle TNA. I'm going to look at the 5-minute chart here on TNA. And I'm going to go back to Friday. I don't know if you made a trade that worked that out, but give us an idea of what your typical intraday TNA approach might be.
TNA or TZA.
Or TZA.
So I use the 20 MA moving average on my chart for that.
Whoops, wrong one. There we go. Moving average. And we'll get that into a 20. All right, what else?
I have the MACD also at the bottom, but it's not.
MACD's at the bottom, okay. 1226 or?
Yes.
Oops, I keep hitting the wrong thing. MACD. The regular standard, okay. And what else?
That's pretty much it.
That's about it? Okay. So we're looking here, and then the first tick on Friday, is that? No, that's not Friday. Where's Friday? The 19th. Here we go. First tick on Friday opens up somewhere around here. There we go. So we go up, we went down. What are you doing here in these first few minutes?
Hold on, I need to look at it.
So this is the first one. That's the next one. That's the third one. That's the fourth one. Are you able to see that okay?
Yes.
Okay.
I do. So I do nothing.
Okay.
The first 15, 20 minutes, I don't do anything. I want to kind of see what's going to happen, what's not going to happen, but let everybody settle. And, so I
Okay.
wouldn't do anything. I do set the open range, which is set within the first 30 minutes.
30 minutes. So we go here and here. There's 30 minutes. And you're going to just do the high and the low of that. Is that right?
Yes. Mhm.
Okay. So we would be looking at something like this for your opening range. I'll move that up a little. Okay. And so now we're sitting here like this. Now what's your play?
So now you just wait. And then the minute it crosses the moving average on the way up, and
There
the
we go.
MACD is positive, that's when you enter.
Right here, we got a positive MACD and we got a breakout of the opening range, and that's a buy for you.
Yes. Mm-hmm.
Okay. Did you do that on Friday, or were you not trading on Friday?
I didn't trade on Friday.
Okay. But in theory, had you traded on Friday, you got the you would have got this. How would you have managed this? Would you just sit back and let it go, or would you have taken the scalp, or what would you do?
So I don't know where I would have been in like 1, 2, 3, but let's say it was a 1.
Okay.
So I would have set the ATR, the stop to ATR done.
Okay.
Okay, but so depending on how the ATR is and if there's a clear support, so the big red candle, I can't see the time, but my stop would have been clearly below that.
Below that, yeah.
Yes.
2 ATR probably would have put you somewhere down in here, I would be thinking, if you got in that tick, then probably right in.
Yes. So my goal is to take 2 ATR. So 1 down, 2 up.
1 down, 2 up. Okay, so you see, pay close attention, everybody. She did the exact opposite of what I described. In my scalping strategy, I was risking 2 to make 1, right? She, on the other hand, is risking 1 to make 2. Okay, so that's that is interesting. That reminds me, I've got these questions I got to ask here really quick, but we'll get to that. So that means you're going to expect not to win most of the trades, but when you do win, you're going to make bigger wins, possibly even letting them trend and go. Correct? What would you say if you just had off the top of your head, or maybe what is your win percentage with this particular setup?
I don't know. Sorry. I'd say a good 40%.
40. Yeah.
40,
See,
50.
so by definition, this should be 33 to 36. If you're getting 40 at least, then you're getting, the 4% edge that you need in order to make any trading system really pay off. And I mean, if I remember correctly, when we were coaching, that you were able to get a little bit higher into the 40s.
Yes.
On that. And so 42, 44 or something. So, if you have as much as a 6 or 8% edge, then, well, that's where a 67% year can come from. So, Roy asks the question, do you normally avoid Mondays and Fridays in your trading, by the way?
No, I
Not
don't.
particularly. Okay.
No, I was just busy doing other things Friday.
Yeah. Okay. So that's the general setup that it'd be fun to delve into that a little bit more, but I got other fun things that I want to ask about. So I mentioned to you that I was going to do this. Some of the people listening here were part of a class that I taught back in January. And as part of that class, we had a 2-question survey, which divided people up into one of 5 trading profiles, trading types. And you actually trade on 2 different ends of the spectrum, as we've talked about, as we talked about last week. You have the one you described, but then you have a different system where you're actually trying to do more like what I do, risk 2 to make 1. Well, you have the 4 different systems. So in 2 of them, you're on opposite sides of the spectrum, which is kind of fun. But I wanted to ask these questions to see where you just generally fall. And I'm very curious because I know we kind of did this years ago, but it was with a more complicated setup, a 20 question setup. So here, can you see this, Sonia? This is question number 1 on the screen. I'm going to read through it. It's all bullets, but so imagine this scenario. You're playing games on your phone, and you find this fun looking app, somehow comes across, somebody recommends, whatever. You decide to download it and you play it, and it's fun, but it's a little challenging. And then you calculate that it's going to require at least an hour to develop the skill to get good enough at it that it would be, really fun and worthwhile to play. So what do you do next? Do you just delete it? Say, I am not going to waste an hour of my life on that thing. Or do you say, well, I'll try it again, see if maybe I get a different impression of how much skill I could build up. Or you will likely try a few more times because you do kind of want to build the skill. Or you say, no, that's it. I'm going to spend the hour. I'm going to get good at this game because it's fun. And I can see that if I got good at it, it would really pay off. Which of those 4 is more like your personality?
I don't like games. I'm sorry.
Delete it.
Yes.
Okay. So you would say a 4, delete it. All right. Now, question 2. There we go. Now, different scenario. You're in a small group that you're comfortable with, close friends, family, something like that, mix, whatever. And one of the group members asks you to share a particular talent or skill that you have. Either talk about it or actually demonstrate it, whatever. You do which of these following? You hesitate, but when somebody encourages you, oh, come on, Sonia, then you do go ahead and share. Or no hesitation, you just share, but you kind of read the room while you're doing it. Or number 2, you hesitate to make sure you can do it right. You're like, I'm going to hesitate, but let me see, can I in this environment really do it the way it needs to be done? Or no hesitation, I don't even care what other people think. I love doing this, and somebody gave me the opportunity to do it, so I'm going to do it. Which of these 4 sounds? What's that?
Number 2.
So number 2 meaning score of 2, right? You would hesitate.
Sorry. Yes, number 3. Hesitate.
3?
Yes.
You. I'm sorry. What's that?
So hesitate to make sure you can do it right.
Yeah. Score of 2. Okay. So you would hesitate, but only because you're worried about whether or not you can actually perform it properly.
Yes.
Or explain it properly or whatever. Yeah. Okay. That's good. So now let's see where you fall in to this category. So what these 2 questions are, one is a question towards to sort of gauge your bias to be right, how much you prefer to be right when you're doing anything. And the other is bias towards getting some sort of positive feedback, which those 2 things are usually similar, but they're actually different. And by exploring the difference with these 2 questions, then I'm able to create this little grid of trading personalities. And so you came up with question 1 was a 4, where you said, forget it. I'm going to delete the app. And question 2, bias towards positive feedback, which was low, which interesting. This puts you as the Malamute trader, which is the typical kind of trading I do, risk 2 to make 1. Did we get that right? Or did I? Yeah, no, that's correct. Okay. So Malamute trader is what you have. You do risk 2. You just described to us your swing trading where you risk 1 to make 2, which is more like Jaguar trading. But tell us about the kind of trading you do where you risk 2 to make 1, or you prefer winning 60-70% of the time.
Some swing trades.
Some swing trades. Okay.
Yeah. And then I actually have a different, but it would take too long to explain. But on my TBA TNA, I also use I can add cheap charts, and that's where I use 1-to-1. But then you need to set up your screen.
Yeah, different setup, but these are the different kinds of charts, which basically always start in the previous candle's middle.
Yes.
Not necessarily where the price is. So,
yeah. So it's a little more complex. But I started with one strategy, and then along the year I added and tried different things, and so now that 67% was a combination. Like I learned how to trade short squeezes and flags, and so along the year I kept adding and seeing what I like or not.
Yeah, yeah. You got to adjust to what the market's giving you, right? So yeah.
That too, certain strategies don't work when the market is oscillating or um, so with the experience that I have now, then I'm able to use one strategy over another one. So it's not just one thing. But when you begin, that was really, really important to me because I can get pulled, in every direction. I'm an artist and I want to try this and this, but then you recognize that, okay, let's just sit down, let's do this. And so.
Yeah, well, I mean, I've coached hundreds of people and in a variety of different circumstances. I mean, everybody's got different things going on. And as a coach, my job is to say, okay, what is it that this individual needs that's really going to help them move closer to gaining that edge in their trading system? And in your case, we recognized that, hey, it was you have this natural creative bent. You like to explore all this stuff, but trading, I mean, creativity in trading and creativity in bricklaying both have problems. You can only build so high on that. If you're going to go build art with bricks, great. But if you're going to build a house, that's going to be problems. So what you have to do is you have to, curtail and contain your artistic and creative tendencies in trading to developing new systems. But those you put on the shelf, you test, and then you move them into production. And when they're in production, you're not creative with them at all. You just implement them. And so we identified that early on for you. And like you say, focusing then helped. So it was fun to watch your progress, and it's super fun to see where you are now at this point. Do you, you've given a great tip to everybody here. Focus and get started with one thing and get good at it. Look for that edge that you're capable of generating. Now, do you happen to have a trading tip, a trading idea for this coming day? Or if not, just tell us what you're looking at for the market.
I have one, but careful. Be careful.
Trade at your own risk, folks. But Sonia's got an idea, so let's hear it.
It's ABIO, ABIO. B
APIO?
as in, no, B as in.
B as in boy.
Bob.
Okay. I'll go to a daily chart here.
Yes.
All right.
It's a swing trade.
Okay.
So you don't have the 200 moving average, but
oh, whoops, that's the volume, not the moving average. Okay. 200-day moving average there. We are way below. That drop off means there must have been some big gap way back. Sure enough. Yeah. Okay. So we just had earnings. We're significantly below the 200 moving average. What are you looking at?
But you also need the 20.
Oh, the 20 as well. Okay. Let me grab that, put that on.
20 to 50.
Can you use the 20 and 50? Okay. I'll put them both on. And we'll get the 50 up. And we'll change the 50 color to something a little easier to see. Okay.
All right. So I would want to buy it above the 50 with
Up
a
here.
stop. Yes. So I wouldn't buy it. I'm not going to buy it now. But so you have a support I'm pointing at your chart, like you can see. But so you see the support right below 4 there. So I would want to catch it on its way up, not, obviously you can't enter it now, but
So this is good. Love that you do this. I think you were doing a little bit of this before we even got started together, but definitely I know I always tell my students this, that buying stuff on a breakout as it's going up actually gives you a statistical advantage, and the biggest reason for that is that it keeps you from getting in that trade which does nothing but go straight down. I mean, it might go straight down anytime you buy it. However, statistically, if something's making a new high, it is just slightly less likely to be that go straight down to your stop trade. And all you have to do is eliminate one or two of those, and you've got an edge by that alone. It's not necessarily a big edge, but it's an edge. And so I'm a big fan of buying buy stop orders, right? And I love the fact that we're looking at your trade idea and strategy is based on that as well. So what you're saying is, okay, if we do get this higher high, and specifically a strong enough higher high to turn that 50 back in, I'm interested. And I don't want to wait till the end of the day because this thing could really move. It's a low price stock. We could be in this thing and it could be to $5.50 or $10 before we know it. So I'm just going to get ready and have that order right there. All makes all the sense in the world. But meanwhile, if it comes down here and goes below your support, of course you're not going to get in before then. But even so, is that where you'd put the stop? Like, let's suppose you did get in.
Yes.
Right here.
So
okay.
So and you could pre-program your trade. You do your buy stop and your stop, and you can even program your target. Out. Sell 50% of. So by doing it like that, you're controlling obviously your risk on the downside, and
yes,
that's one of the trades that I'm waiting for.
That's terrific. Okay, thanks for sharing that with us. I'm gonna actually throw on the go no go trend indicator that Alex Cole shared with us, and just see what this trade looks like here. So yeah, this is what I was kind of hoping to see. So we got no goes as it crosses the 50 period moving average. So we have got goes here, and all of a sudden this day says the upward trend changed to a downward trend. But look what we have here. These light pinks are weak downward trends. The dark pinks, the purples rather, are strong. And so we get this strong, but it doesn't go anywhere. It sort of stops. Then it weakens, starts to get strong, but it weakened on Friday. So that's it. See, that's a nice turn. In fact, it was a green candle, so it's going lower and closing higher. So basically, the downward trend is weakening. And what's Sonia doing? She's looking for the first chance to get in on the upward trend. That's perfect trading, because if the downward trend is done already, that's a really weak downward push. And so we're likely to have a strong upward trend if in fact it resumes. So yeah, the logic of that trade all put together. I mean, you're not using the go no go trend, but what Alex likes to say about this, and I agree with him, is like having a professional technical analyst in your pocket to pull this out and look at this indicator. And what I find fun is we put it on top and we see an overlay that matches a profitable at-home day trader in Sonia. She's not looking at it at all, but it still matches the sort of outlook she has. Now, she has a specific tactic that's not captured in there, but that's what good traders do. How do you plan your entries? How do you know your exits before you even get in? All that kind of stuff. So thank you so much. You said you had another one?
This one is extremely volatile too, but so it's COS, K, like Cruella, O.
KOSS?
Yes.
Oh, one of the meme stocks. Nice.
Well, it's also came up on my short squeeze. So it still have 38% short interest.
Oh, so this is interesting for all those who follow GameStop and that whole phenomenon. See, the GameStop trade, if you're reading Wall Street Bets, there's a lot of guys on the Reddit that are talking GameStop. Oh, it's not done. It's so great. Hold diamond hands. Blah 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 blah. Man, those people are going to get smoked. That trade has run its course, and you got people like Bill Gross getting on CNBC talking about how he made literally $10 million. Is that what he said, or was it 10 billion? I don't think it's billion. Anyway, 10 million. It was $10 million he made shorting GameStop after everybody, you know, I mean, he didn't get in early and short. He wasn't one of the early guys. He was one of the guys who said, wow, it's a 400. That's too high. I'm going to short it. And this, I think it's hilarious because Bill Gross was the bond king for years with PIMCO, was trading, hundreds of billions of dollars, and he's literally just sitting around day trading. The guy's 80 years old. What is he doing? So he made 10 million on GameStop. I mean, that's just him. That's just somebody who's out there happy to talk his book and hope that it helps his position. I know people who are professional traders in proprietary trading houses in New York City and the vicinity, multiple people who are just eagerly waiting to short GameStop today. And so I mean, maybe it'll work out. However, what Sonia points out is that this this company, KOSS, which makes terrible headphones, I don't know whatever else they make, but somehow they got really excited. People got really excited about buying them because they weren't all that bad. I mean, that's the whole premise of all this is, well, they're not that bad. You guys are shorting them too much, and we're going to make a play going the other way. Well, these headphones are terrible, really, and I think that the short people are like, no, we're gonna hold here. We don't have a huge Reddit community all around them, and yet it's not going down, and we still got 38% short ratio. Is that what you're talking about, or
Short float?
Short float, 38% short float, right?
Yes.
That's huge. That's big,
Mm-hmm.
and the fact that this is, like GameStop when it got going, it was one of those that got caught up in it, and also like GameStop, it's kind of coming up. But this is what would have me worried about it here is this tiny little volume by comparison. That
So
being
I'm not
said, we
saying
have I'm sorry, what's that?
I'm not saying buy it now. I'm just that's
Yeah.
one of my what you did.
But you are talking about long, right? Not short.
Yes, mom.
Yeah. So I like the idea though. It's only $25 stock, and you got this huge gap of support, easy enough to be buying it here in the mid 20s and having your stop down there around 18. That's what I would see. Where would you put your stop? Or would you
Yes.
not go stop at all of this?
No, I would. I definitely.
Okay.
I don't ever take a trade without it.
Yeah. I'm a big fan of gap trading, and that is a beautiful gap. I think a very important one. We have this, gaps from here to there and then sells down. That means that resistance should be and stay at this level. But where are we? The past 7 or 8 trading sessions, we're above that. So whatever resistance hit, it's not there now. Now we've got all this. This is serious support. That's how we know it's serious support, because all those sellers, as Tom DeMark would say, are exhausted. The selling got exhausted. Now we just have buyers. So I like this a lot better than GameStop just by the look of it. But as I do say, the volume has me worried. GameStop has that low and declining volume right now too, and that makes me worried for the bulls. I actually got in GameStop myself and bought equivalent to, somewhere on this day. This is the day where it started coming back up, all these meme stocks, and I didn't buy particularly smart or anything, but then GameStop, I got 160 a share, and GameStop got up into the 290s, and I saw it just couldn't break 300, so I went ahead and took the profits there. And I mean, that's me. I wasn't Michael Burry. I wasn't following I'm just like, there looks like a trade here. I got in at 160 with the idea that, okay, I'm going to set my stop really low, and I'm going to take a smaller profit, risk 2 to make 1 ratio. and it worked out. It was a great trade for, and that's all I need. Move on to the next one. I hadn't been looking at the other meme stocks. I'd kind of thought maybe there isn't, but I like this one here on costs. So thanks for bringing it up to us.
You're
We're
welcome.
almost down to the end of the hour. Do you have anything else you want to throw in there that you think is worth mentioning for people to know about? That how do you encourage people who are actually interested in trading? That's who's listening today, to sort of stay with it and get to where you are.
Coaching for me was what really helped me solidify everything. Like I said, I was all over the place, and so I highly recommend coaching to anyone.
Thanks. I did not pay Sonia to say that.
Of course not.
Really. That's very kind of you to mention that. In fact, though, I would say for anybody who's interested and is listening, we don't have a coaching situation going on right now. That is the Actions to Wealth team. We are planning on putting something together very soon. There are 2 classes coming up. One is on low price stocks like ABIOS and others. And we would also feature the kind of meme stock trade, cost, GME, AMC, all those other types. What would you do with those? And the things we would look at with the low cost stocks would apply to them. And so there's that class coming up. And then we also have a class on option trading, which is specifically leveraging higher cost, large cap liquid stocks with option trades. Both of these are swing trade, 1 week to 3 week kinds of trades. And they have a very high chance. These particular strategies have a very high chance of outperforming the markets. You heard it. Sonia uses these strategies and she did 67% last year. Might be a little atypical, but I can tell you from having worked with Sonia over the years that she beats the markets more often than not. And she's doing it right. So I know it's possible. I have several students that I've coached this way. Sonia's one of my favorites to chat with because she's just a pure trader. She's not working for some other company. She's just living the dream and enjoying Florida.
Thank you.
Thank you for coming on today, Sonia. Could I entice you to come back at some point in the future, perhaps?
Sure.
Really? Okay, that's big, everybody. See, because Sonia, you guys are so lucky to get to hear her because she's not one of these gregarious, extroverts who just loves to be in the spotlight. In fact, what you were telling me that was Adam said to you that hey, this is going against your don't get in the spotlight rule.
Exactly. Yes.
Well, we thank you for making an exception today for us.
Thank you for having me.
And we will not abuse the privilege, but I think there might be a really interesting moment through the summer that it would be fantastic to get you to come back and see what your take is when we are going through that period of time and whatever the market's doing.
Summers are fun.
All right. Thanks everybody for showing up today. I'm going to take one more look here before we split on this. I'm going to go into the Nasdaq futures. We're going to look at the 5-minute charts. See you, Sonia. And how we're shaping up. We still got 2 minutes to go before the opening bell. Nasdaq kind of weakening on that upward trend we had. Here's a bit of a moment of truth coming into the pre-market. Will this support hold or not? Shukri asks, Gordon, will the delay in tax filing deadline delay the May 14th day of reckoning? Great question. No, it won't. Because the tax filing deadline is going to be for this coming year. And so the question of when you file won't change your what anybody's doing this year is actually going to be around next year. So this year's tax filing won't have an impact on that and won't be impacted by that. Now, what could change the May 14th day of reckoning? People the Biden administration is talking about raising the long-term capital gains tax. And that's a curious thing to me, because if he raises it so high that it matches the ordinary income, which they could do that, that would be disgusting, but they could do that. If they do that, then there would be no more incentive to try to sell out, and that could eliminate the 56-week pattern entirely. And I don't know that it will. I mean, I think it's low probability that it would take place between now and May 14th. But if it did happen between between now and May 14th, that would just call off the downward parade. I don't expect that to happen. I think it's a low probability. And I think there's a reasonable probability that some changes to that long-term capital gains tax rate will be made between now and the end of the calendar year. And so that will be important to see what happens, or what effect that might have on the 56-week pattern throughout the later part of the year. But see, the machine is already wound, and the trap is about to spring. It's already, the clock is ticking down. All of the things that are going to wind up and explode on May 14th started last year at the end of the pandemic. All the buying came in, and so people like Sonia had a great year. Not just Sonia, there's a lot of trend following hedge fund people. I mean, think of what's her name, Kathy Brown. I don't think it's Kathy, the lady that runs ARK. I can't remember her first name all of a sudden. She's sitting on hundreds of millions of dollars in profits, maybe billions, from the ARK ETFs and its assets under management. Based on, if you start from the low of 2020, I mean, everybody's doing good if you get to measure from the low. Not everybody bought in at the low. She did. She bought in near the lows because she made a big bet, and so after 1 year, she's going to have a whole lot of incentive to start taking profits from that. And part of what's going on in the tech space is that's already happening, because the tech space had, Apple had this huge, and Microsoft too, huge moves even before COVID. When COVID came, they went down, but not as much as the market. And then they went up a lot after it. So where can you take profits safely? You can take them out of tech. And that's what's been happening. Okay, here we go. Opening of the market. We're off and running already. And there it is. Nasdaq going up. Just Kathy Wood, not Brown. I had the right name, the first name right, and the last name wrong. Thank you, Elias. That's who I'm talking about, Kathy Wood. And I feel like people who are running tech funds, they've already taken some profits, but come May 14th, they're going to take profits in everything else, in travel, in oil, in energy, in basic materials, all these other areas. And they're going to have to, because the gains were so big, they can't afford to lose those gains. They've got to bank them and put them on their books, so they can brag about how good their returns were, so they can get more people to buy into their funds. That's the game that professional money managers play. And it's not a game if you're actually making money, which Kathy and the ARK funds do, but not just them. Most everybody, from a period of time, April to April, they made a lot of money. And so that's why that temptation is going to come to a head in the middle of May. And that's what we're watching for, the 6 weeks. What does the market do between now and then? If the market tears and runs away, just going up, up, up between now and then May 14th selling, it'll still occur, but it will probably be tepid. And then we'll know, hey, we really want to buy that dip. We want to buy that with both hands, as they say. On the other hand, if between now and May 14th, we see this choppy market, it just can't get anywhere, just can't get going, we know that's people selling all along the way. And finally, the flood of selling is going to hit, and it's going to be bad. And so anyway, carrying on the 56-week pattern talk. Looking forward to another one of my former students next week. Glenn is his name. I'm going to bring him on here. And not only did Glenn become a successful trader, he is now a successful coach. So although I got to coach him, he is coaching other people, and that's how good he got at it. So I'm going to look forward to having another guest on who's very skilled at flag trading. Sonia mentioned flag trading and other styles. And so we will be looking forward to that. We'll also be counting down that red letter day, May 14th, and what are we doing to prepare for it. Until then, everyone, enjoy your first couple of days of the week. Probably likely to be bullish. Be careful for what comes after that. And until next week, take care and trade well.